Hi, everyone. Welcome to Just Sharing. And I am here today to speak about diversification of your portfolio. And that could be your portfolio for your investments, for your personal investments. So let's talk about it. We're speaking about diversification, and I am taking a look at Fidelity. They have a really great guide called The Guide to Diversification. And so having a diverse portfolio definitely helps with managing your risk. I'll say it that way, right? So one of the things that I like to do is I like to take a look at what the diversification will look like, um, and what I'm speaking towards. So one of the good things that I like to do is actually go to my own portfolio. So I'm in my workplace portfolio with Fidelity now. So um, let's take a look here. And one of the things I like about Fidelity, once you're in your employer's sponsor 401k plan and how they have it set up, then you'll be able to go down a little further and see how your 401k is invested, right? And that is what I mean by diversification, is how your plan is invested. And that goes towards not just for your 401ks, it goes for your other personal investments as well. If you're looking at your Roth IRA, your traditional IRA, whatever investments you have, this speak towards that. So one of the things that you can look at is what they call your asset class. So it's including, like, if you're in stocks, if you're in bonds, if you're in international stock, short term um, investments in other things. And so in order to have like a good diversification, it's always good to have a mix of things, right? And that's what we mean by diversification. You don't want, in the terms of what my mother and grandmother would say, you don't want all your eggs in one basket, right? Right. So you want to have a good mix. And one of the things that I truly like about how Fidelity sets up explaining how to have a diverse portfolio, and it's typically, just in general, just not with Fidelity, but figuring this out is based on you and your comfort level as to how you want to invest, right? So it's based on you, and your risk level is what the advisors would say. And I do have to state, I am not a financial advisor, and I am not here to provide advice, just to give education and some information and have a discussion. I am a financial motivational consultant, so I'm here to cheer you on and answer the questions that I can answer, and but not to provide financial advice. So taking a look here and looking at the risk, it's your level of risk is how your portfolio would look like. So, in a more aggressive person who want their monies to um, who is not afraid of risk. I'll say that on more of the aggressive side for growth. You may see someone that their portfolio may be like 60% of stocks, and then 25% of international stocks and 15% of bonds. So that's like an example of an aggressive growth uh, portfolio, or someone more on a conservative side may have most of their monies in bonds. So it may be 50% in bonds, 14% in US stock, and 6% in foreign stock, and short term investments could be 30%. Someone who is looking at a more balanced portfolio and their risk level, their portfolio may appear to be like, let's say, 35% stock, 40% in bonds, and then 10% in short-term investments, and maybe 15% in international stock. And all of that is based off of your risk level and what you're looking at your annual return to be with those. And so if you go on to the Fidelity site, they actually have a guide that provides you with information on diversification, build how to build a solid investment strategy to help you realize your goals, no matter what the market does. I really like that. And one of the things I really like about this guide is that it has pictures of healthy food. So as you know, health and wellness goes with financial wellness. You won't be able to enjoy your finances if you don't have your health wellness, right? And so Fidelity got it right. They have pictures of healthy nuts and fruit. So it's really cool. And then they even give like takeaways. It says the key takeaways for this diversification guide is diversification can help manage risk, and you may avoid costly mistakes by adopting a risk level that you can live with. That's important. So you want to adopt a risk level that you are comfortable with, and rebalancing. Rebalancing is key to maintaining a good risk level over time. And that's good that they speak about rebalancing, because where you are a year from now, you may want to rebalance your portfolio differently. Some people rebalance throughout the year. They may rebalance every quarter. So it's going to be based on your risk level. And when it comes to rebalancing, I always say, just make sure you speak with your financial advisor, or sometimes the robo advisors will rebalance it. You'll get like an email, and if you're participating in something like that, they may ask you, hey, let's review how your portfolio is doing, and agree to these changes. And 9 times out of 10, those changes are rebalancing of your portfolio, and whether a certain percentage is in stocks, or a certain percentage is in bonds and international or cash. So the importance of rebalancing, and let's take a look. So rebalancing is speaking towards diversification, meaning that diversification is not just a one-time thing. So that's where rebalancing comes in at. So you get a chance to, however you want to do it, periodically every 4 months or 3 months, however you want to do it, you could check up for take a look at your portfolio for rebalancing. And what if you don't rebalance? Then, hypothetically, if you don't rebalance, it could cause another like a allocation to grow more if you don't rebalance. So looking at an example, they says a hypothetical portfolio shows in this example, it shows what would happen if you didn't rebalance. So in 2000 to 2020, the stock allocation would have grown significantly. Okay, so they're showing that if you didn't rebalance, then if you started with like 50% in stocks and 10% in cash and 40% in bonds, then if you don't rebalance over time, then the stock side could grow higher. Instead of 50%, it could grow to 78%. So and you may not want that type of risk level. Your risk level may be back at 50% for stocks. So it's always good to rebalance and take a look at how your portfolio is doing and how to manage it. So there's a guide here that you can take a look at and have that conversation with your financial advisor or however you're getting your advice. So the bottom line that they say here is that achieving your long-term goals requires balancing your risk and reward. That makes sense to me. So choosing the right mix of investments and then periodically rebalancing them and monitoring your choices definitely can make a difference in the outcome that you have. So there you have it. Speaking towards diversification of your portfolio, and that goes for your personal investments, whether it's an IRA or whether it's an employer sponsored 401k. All of those investments need diversification, and definitely check out the Fidelity Guide to Diversification. It was pretty cool, pretty colorful, which I like, and a lot of illustrations, which I like, because if you're someone who it's brand new to looking at everything, then you want something that's easy to read with the circles and the percentages that you can see, right? Definitely, how do you diversify and what kind of risk level are you? For me, I'm more conservative or balanced. I like to be balanced. Sometimes I do like the growth. Of course, I want to get the growth, but I'm not a risk taker like that. I like to just keep it balanced and then continue to keep it dollar cost averaging. um, but I don't like to take a whole lot of risk when it comes to my money because I work hard for my money. So there you have it. And if you have any questions, please put them below in the comments, and please hit the thumbs up, like, and subscribe to this channel. And I'll be bringing you more information as I go along. So this here is my channel called Just Sharing, and I talk about finance, financial wellness, and health wellness, and I'm here to help. So thank you for watching and have a great one. Bye.